YMAX, the YieldMax Universe Fund. Now, let's talk about YMAX for a second. This fund doesn't just offer a high yield, it throws an absurd 88% yield in your face like it's handing out Halloween candy. But guys, here is the twist. YieldMax doesn't actually buy stocks. It doesn't actually even own a single stock. Instead, it buys other YieldMax funds. Yes, you heard that right. It's a meta fund. It's a wrapper of pure YieldMax greatness. So every month, it's going to be rebalancing and reweighting its full suite of YieldMax products, and you're going to think that you're getting a lot of diversification. But the thing is, it's only with a few family of strategies that all do the same thing. They all hunt for volatility and income. Because if only one YieldMax product feels a little risky, what could possibly go wrong with a basket of them? Now, here's how the strategy works, or how the strategy doesn't work. The underlying funds don't invest in companies. They invest in options. Specifically, they use what's called synthetic covered calls. Instead of buying, say, 100 shares of Tesla outright, they mimic ownership by buying call options and selling a put. This gives them exposure as if they owned the stock. Then, against the synthetic position, they sell short-term call options to collect premium and income. Now, that's the really juicy part, the high yields that you're able to see. But this setup caps upside potential. If the stock goes up too much, the short calls get exercised and the fund misses out on all those big gains. Sometimes they'll employ what's called a call spread, which is when they buy another call option at a higher strike price to allow for a little more upside. But the trade-off means that there's going to be smaller premiums. Now, these strategies only make sense when volatility is expected to spike, and even then, it's more of an art than it is a science. So you're chasing those dividend yield dreams. You saw that monster yield that YMAX offers and thought, this is it. This is what I've worked so hard for in life. I get underpaid at my 9-to-5 job. I just don't feel appreciated. Life is unfair. I deserve a high yield. I deserve all the benefits of YMAX. So you've imagined weekly payments flowing into a river of easy cash. You thought it was a shortcut to wealth, an escape from the 9-to-5 grind. But ask yourself, if the S&P 500 with over 100 years of data has only averaged around a 7 to 10% annual return, how on earth is YMAX pumping out 7 times that? Spoiler alert, it's not magic, it's risk. It's big, complicated, and often misunderstood risk that YieldMax is taking to give you these high dividend yields. So let's talk about what you're really getting into. Those weekly payments, they may seem attractive, but from a cow-pounding perspective, they actually do very little, and often it comes with higher administrative costs. Let's talk about YieldMax's high expense ratio. An expense ratio of 128 basis points. That's $128 for every $10,000 you have invested. Compare that to something really passive like an S&P 500 fund, which charges just 3 basis points, a measly $3 for every $10,000 invested. Now, let's say over the long run, right? Because we're all long-term investors, over 20 years, assuming a 7% annual return, that's very conservative. The difference in fees between the two funds, if you had $100,000 invested, could cost you $80,000 over those 20 years. Let that sink in. 80 grand gone, vaporized because of the higher expense ratio. That's really funny to me because a lot of you guys claim that you want to be the one that's rich. I didn't realize that you just wanted to make other people rich from your foolish decisions. And while the passive S&P 500 fund has been around for decades, is time and tested, and has made everyday investors quite rich, YieldMax has only been around for a year. YieldMax has only been around for a year and a half, and it's already lost a third of its value. And this is during a bull market. Can you imagine what would happen during a bear market? That's right. In an environment where most stocks are soaring, this thing is sinking. And it's not because it's betting on bad companies. It's because it's obsessed with volatility, not stability. This isn't true diversification. It's just volatility farming. And when the fund harvests volatility, NAV erosion is almost inevitable. That's financial speak for your share price is probably going to go down over time, even as the fund keeps paying you what feels like a generous dividend. Now, to be fair, if you had reinvested every single dividend since launch, your total return with YMAX would actually slightly beat the S&P 500 by about 1%. But if you're investing in this thing for income, meaning you are not reinvesting the dividends, your return would actually be about 5% lower than the S&P 500. And you took a lot more risk and paid a lot more in fees and placed your faith in a fund manager that's still unproven just to do worse than the overall market. I don't think people actually realize how risky active management is. People would be shocked how bad portfolio managers and active management are in beating the overall market over long periods of time. Does YMAX belong in your portfolio? Maybe, but it's really like renting movies from Blockbuster in 2025. Look, I understand the high yield can be very seductive. It definitely caught your eye. You're wanting more of it. But there's a reason the phrase no free lunch exists. YieldMax is definitely clever. I'll give it to them. But clever doesn't always mean that it's smart for your money. Sometimes the best way to get rich isn't chasing fireworks. It's chasing a slow, boring, and disciplined way of investing. That's the kind of investing that works. That's the kind that's built millions. YMAX might give you the thrill, but building long-term wealth, that's still up for debate. Thank you to all my Patreons who get access to my full $250,000 plus portfolio and all my weekly trades. If you ever have a video request, just let me know in the comments below. Remember, my videos are always found in podcast form under the Collect Cash podcast name, and I will catch you on the next one.
You cannot go in the casino and be afraid of casino. Then otherwise, don't even go anywhere near the casino. I came to the market knowing that these are the risks, and I'm willing to accept all the risks. I'm not worried about this thing.